Hi, Jonathan York by Financial Partners, looking at investment markets. A pretty big week for the US administration with the Supreme Court hearing on the tariff legality. Now, it will be interesting to see if he loses that Supreme Court hearing, because he's come out and said there are various other options available to keep those tariffs in play. Now, what is quite interesting is that various sort of economists and analysts are now coming out and saying that tariffs are starting to hit prices just at the wrong time as they go into the big holiday and spending period in the US. Now, as expected, the Federal Reserve did cut interest rates by 25 basis points, taking the target range down to 3.75 to 4%. But it wasn't a unanimous decision. It was a 10-2 split. 10 voted for the 25 basis point cut. One governor voted to keep rates on hold. And no surprise, really, Stephen Merriam was still voting for a 50 basis point cut. Now, it'll be interesting to see if we do see any further rate cuts from the Fed going forward. Potentially on their dot plot, they're looking at possibly one more in December and then maybe one more in the sort of first quarter of 2026. But if those tariffs do push prices up and inflation is running now at 3%, that is 1% above the Fed's target range. So although you've got weak unemployment, it may be tough for the Fed to sort of continue cutting rates if inflation remains at that 3% level. Now, what is quite interesting after that Fed rate cut, US interest rates have actually nudged up. 10-year is above 4% now at 4.08. The 2-year is 3.58. And the 30-year is nearly 470 at 467. That's around 10 basis points higher over the course of the week. Potentially that maybe gives Trump and his administration a bit of an inkling on the way the markets see the situation, with a rising debt and also potentially, sort of interest rates having to remain a little bit higher than Trump certainly would like because of the inflation worries. But of course, Trump is still saying there's no inflation in the US economy, which is clearly not the case on the data. A little bit of a mixed bag on the big tech earnings that were reported last week, but overall still relatively encouraging. Now, the US government is still in shutdown, and it's going to be interesting to see how it plays out, because at present it looks like it's playing into Trump's hands because he's doing pretty much whatever he wants with no congressional oversight. Now, there potentially was some good news coming out of the Trump-Xi Jinping meeting. It looks like there's some progress was made on the trade deal. Trump has agreed to reduce some of the tariffs on Chinese goods. And on the Chinese side, Xi Jinping has agreed to start purchasing soybeans. And that will certainly give farmers a big boost, because US farmers really were struggling with that lack of Chinese purchases of the soybean products. Very little change in oil, currently around 60, 80 and change. Now in the UK, it seems a long wait until we see that budget. It's really going to be very interesting to see what comes out of that, because the UK economy needs lower rates. But you have rising unemployment, you have rising inflation. And the UK government having to deal with that horrific train attack as well. Now, in the EU region, with no resolution to the Russia-Ukraine war, it's just sort of dragging on, and certainly Putin is showing very little signs of really wanting to end that conflict. And that's obviously making Europe very nervous. Now, in Australia, the Reserve Bank left rates unchanged at 3.6 on the cash rate, really citing that sort of spike in inflation is really a little bit concerning. They're not pushing the panic button yet, but it is a little bit concerning with inflation running at 3%. And indeed, there is even some talk now that potentially you won't see any further rate cuts in Australia. Although with the employment data still a little bit soft out there, and really getting sort of almost softer by the month, predictions appear to be that there may be one further cut in February. Now, here in New Zealand, obviously there are some potentially green shoots coming through in the economy. You've got job adverts that are increasing, but also the jobs filled data is improving as well. You've certainly seen a pickup in the housing market as well, as interest rates have been cut after the recent rate cuts. I'm potentially still looking at one further cut here in November, taking the OCR down to 2.25%. That would then give a clear run through, because the next meeting isn't until February 2026 for the Reserve Bank. And certainly by then, with mortgages being reset, more disposable income in the economy, you would expect to see a little bit of growth coming through over the next sort of 2 to 3 months. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.